Let's talk tech. In this video, I am Dr. Stock, Doctor of Education, and just like the lightning bug that flew backwards into the ceiling fan, I am delighted. We're going to do some commentary and technical analysis in this video on Nvidia, Apple, and Tesla. I will tell you later on about your free stocks from Moomoo, where you can see my buys and sells for how I'm profiting in this market, and then also my options course that I'm developing, and then also where you can find my Tesla stock price prediction. In the meantime, I do want to get right into the chart, so that's what we're going to do. And so let's bring up Nvidia first. And transition, boom. All right, here's Nvidia, and we're looking at the daily chart on Nvidia, and you can see this head and shoulders pattern that we have forming up here. Now, mind you, we don't have confirmation that it's an actual head and shoulders pattern. We'd have to come back down to around 440 a share, and today we closed at 460. We're up above the 50-day, which is a good thing. The 50-day has gone flat for us. It'd be nice if it was this upward trajectory that we have right now. There's a lot of uncertainty in the market. At the moment, Nvidia is not any stranger to that. I said that it would trade with the market. As the market rallied, Nvidia did too. So we want to be watching that. We actually had the double bottom that helped us out at first, and then from there, the market rally really pushed us back up above the 50-day. 200-day still way down there at this point in time right now. Earnings for Nvidia don't come up until November the 21st. So for them, they're a ways off. We have some time for that. I do have a stock price prediction and earnings forecast for Nvidia over at the Patreon as well. That link is down in the description of this video. In the meantime, take a look at this. Let me zoom way in on this for you. Do you see this blue line that we have coming in through here? That's the 50-day simple moving average. The low price tagged it, and then we did bounce off there nicely. The market bias was there to help push us up. You can see that we did meet resistance. That high price was about $476 per share, and so that's where it peaked out for the time being. As we look at the momentum indicator at the bottom of the screen, the RSI that's on here, we're still above 50. And we'll see if that does continue to climb for us, or if we see it start to tick back down and start to touch that 50 line where the momentum starts to die off. And then, like I said, that 50-day moving average, not to be confused with 50 on the RSI, is something that we want to be concerned with crossing back over and then heading downward. And then we don't want to see a negative slope come in on this if we're bullish on Nvidia. And I am bullish on Nvidia. I think that as we have the market strength continue, that this really should be back over that $500 per share. So if we go to the Qs just for one quick moment, just to see where we were at with that, and I have some technicals also up on here. Let me hide those for a moment. So you can see we keep on putting in lower highs, and then we sort of had even-ish lows on here, which isn't too bad for us. Double bottom and then ramped up off of that. Now let's put the technicals back up on there. I'm going to take away the Fibonacci just for clarity. There we go. So when we look at this, you can see that we tagged the top of the trend line, sold off a little bit, but a lot like what we had for Nvidia. The Qs, by the way, also had a lot of success when it comes to crossing back over its 50-day, which is at 367 as we close today. And as we close today for QQQ, this was at 369. So we're almost a full percent up over the 50-day. So we're still in bullish territory. At least as far as the 50-day goes, we do want confirmation of coming back and not only retesting these previous highs that we had before, but going over, exceeding those highs. I do think in the near term, in the Qs, by the way, that we could go back and we could retest this trend line before possibly returning back down to the bottom. So we're going to have to watch for that. So back over to Nvidia just for a quick moment here. So let's go to the hourly chart on Nvidia, and we'll drop a Fibonacci on this, and then we'll talk about what we could see from there. So let me stretch that out a little bit more. And what we're going to do is we're going to grab the Fibonacci retracement, and we're just going to go from the bottom of this wick, and then we're going to go to the top of those candles. And you can see that we came up to the 50 on the Fibonacci's as we have right here. And that's something that if we do want to see this continue upward, we have to cross over that 50. Instead, we hit resistance on it. We are setting up nicely as per the RSI that we have down here, the momentum that we have on it, that it is possible that this starts to work sort of like a bull pennant, that we start to see this cross up above that 50, which is at 461.53. So crossing up above 462 is what we're looking for in the Fibonacci's for this one. Should we cross that, we have room up to about 465, and after that's room up to about 470. So that's something that we do want to continue pressing on, and it is possible, given the momentum that we see currently, that we get that, especially if tomorrow is a green day in the markets, and I think that there's a reasonable chance that we could. I do want to point out that Jerome Powell speaks on Thursday at noon, and then also don't forget Thursday at 8:30 in the morning is initial jobless claims. Those two things I think are going to be big catalysts for us coming up. That's another video for another time. Let's move over to Apple. It's easier to get there when I type in the right ticker. There we go. We're going to go to the daily chart on this one as well. And so for Apple, There we go, reset the chart view. They are sort of in this descending wedge pattern, which overall is a bullish pattern for us. You'll notice that this trend line that we have down here along the bottom, we did pop out down below it a couple times, but quickly returned back to trend. We have the 200-day in the yellow here creeping up towards that trend line, which is at about $170 per share. And you can see we did go down below that, but this candle right here that opened, that one opened at 169.34 and then quickly from there went back up. We actually had a high price on that one of 172 and a closing price of 170.69. So this 200-day right here currently is at 168.56, so about 169, but I think by the time we get there, it could be up closer to 170. So we do want to watch for that for support, possibly that we get a double bottom coming out of here and then a bullish reversal coming off of this. There are some demand concerns, and it's also a headline for the iPhone 15 Pro Max with some screen burn issue, but that's from the beta version of iOS 17.1.1 or something like that. It's not a released version, but it is one that they're going to fix prior to releasing that for the everyday consumer. So for this one, this is the trend that we're following. This is something that we could see a bullish reversal on. So we do want to watch for that to break the top of the trend line. Should it break down through the bottom, it's probably also breaking the 200-day. And I do want to point out, here's 2022, and you can see Apple did fall down beneath that. But before that, Apple doesn't cross its 200-day, not strongly anyway, for very long. So if we get down to the 200-day, and you saw what happened the last time that we got near it. Let me zoom back in on that spot. Here's the last time that we got near that 200-day, and we ripped from there. I think that'll happen again unless we get something strongly negative coming out of Apple moving forward from here. So Apple, which is expected to come in pretty much in line with consensus for this quarter, and then for next quarter, that's kind of what we want to hear about is what they see coming up. Right now, the outlook's not so great. It has closed down below its 50-day, and it is possible that we return back down to this trend line sometime in the near future. We do have some support along the way. About 174 could be a place that we would stop on the way down there, and then we could also stop at about 171-ish, and then down from there to the trend line itself, which would put us down around 170, 169, and like I said, Apple doesn't often cross, for a long time anyway, its 200-day moving average as we have. You can see in 2022 when it did. Otherwise, look at the year's worth that we have back here. This is when the market had kind of a terrible time at the end of 2018. That was the entire market, not just Apple. And then from there, we hit the pandemic, crossed down through, and then up and up. And then you can see what happened, like I said, in 2022 and what 2023 has been like for us. So I do think that should we come down below that 200-day, that's going to be a really strong sign for us that Apple could soon pop. If not, it could be that the broader market itself is having trouble. So be on the lookout for that one. Apple earnings, by the way, are 10/26. There are a lot of big tech earnings next week, and I make another video covering all of the big tech that we have coming up. In the meantime, let's move over to Tesla, who has earnings on October the 18th, by the way. There we go. So for Tesla, we're in a bullish channel still. We've been there for a while, since going all the way back to January of this past year. There we go. Extend my trend line out that way. Perfect. There we go. So now you can see the channel. You can see that we popped down through it a couple times or rode along it, however you want to say it, and that we do, I actually want to adjust that down. I like that better where it was. Probably have that off just a little bit. There we go. So you can see when we got down to it, ripped up, and back here, we got down near it, ripped up, and then there's another time gotten down to it, ripped up, but now we're in this symmetric triangle pattern coming up. We are up above the 50-day. Bullish for us, but the 50-day itself has gone flat. We do want to see if we break down through this trend line here, that could be something that would not necessarily be great news for bullish momentum moving for Tesla. Well, right now we're kind of, if you look at the RSI, we're back and forth across the 50, and you can see the narrowing that we're seeing the price action as a result. So for Tesla, for their earnings coming up, I think this is the first time that I actually have their earnings per share above what consensus is. And I can share that consensus with you, and then we'll come back and give some further technical analysis on this. So let me bring up the trading economics earnings calendar here. There we go. And Tesla right here, October the 18th, consensus right now, 73 cents per share. The previous was $1.05 per share when we look at Tesla. So for that earnings per share to come in down at 73 after we were up there, that's dropping down, what, 20, 30, 32 cents off of $1.05. So a 30% drop quarter over quarter. Not great when we're talking about a growth company. So for Tesla, I will say that Tesla does tend to trade pretty rich. Now, mind you, that richness that Tesla trades at can be justified by their growth metrics. And if their growth metrics get affected, then their stock price also gets affected. Now, mind you, we know that the third quarter is not going to be a shining example quarter for Tesla. That has been priced into the stock ever since the second quarter earnings when we heard about those and we had a lot of fluctuation with the price. This is all about guidance. This is about market penetration coming up. This is about Cybertruck release. Hopefully we hear something there. We want to hear about their margins. We want to hear about Tesla insurance. We want to hear about their charging network. We want to hear about other companies taking part in that. We want to know more about full self-driving. Like, there are so many things that people are waiting to hear about, and we could get very impressed by what they have to tell us by the outlook coming up not only for Q4, which means that they need to put out like about 500,000 vehicles in production, by the way, and about 4,750,000, so 475-ish thousand vehicles for the fourth quarter to make that 1.8 million. If they miss on deliveries, if they're not going to make that 1.8 million, that could be something that could drag the price down, the stock price, I should say. It could drag them down. I do want to see their other revenues start to fall out a little bit more. Mind you, if you want to see all the numbers that I have calculated, all the numbers that I have worked with, not only for Q3, but also for Q4, and then every year at a time going up all the way through 2030, that is available over at the Patreon. That link is down in the description. And let me just share this with you real quick and we'll get back to the charts. So Moomoo is the app where I trade a lot of my options, and you can get up to 16 free stocks by using my link down in the description. Here are your deposit levels. Here are the free stocks that go along with them. A free share of Tesla or Google available at that $5,000 deposit level. I post my buys and sells over the Discord, which is available through my Patreon. My Patreon is where I have my options course, and it's where I have my Tesla stock price prediction and earnings forecast and my Nvidia stock price prediction and earnings forecast. So go ahead over there and check those things out. In the meantime, let's get back to that technical analysis on Tesla. So where do we see this thing going for earnings? This is one I've been back and forth a lot on. You can see the entire market's been back and forth over what to make from this past earnings that we had. You can see it sold off, but then they're like, it's good, it's bad, it's good, it's bad. And, you know, that fight between the bulls and the bears just keeps on going and going and going. I do think it's possible that we can pull down to the bottom of this trend line leading up to those earnings. If that's the case, that gives us or it's at the 50-day. Either way, we have a big decision to make. I think we'd be hard-pressed to come to the top of this trend line for these earnings. I still think that if we draw down prior to earnings, which is Wednesday after the market closes on October the 18th, that's this week, should we draw down strongly on that, possibly break this trend line, that it is possible that we rubber band back up following that earnings call that we get on Wednesday in the after hours, and then Thursday is pretty good for us. If we run up, I think that confirms the case that we could possibly sell off as earnings hit us. So I think we either stay in the middle and we stay indecisive, which I think is highly likely that we stay indecisive on this, and you could consider doing something like the Iron Butterfly or Iron Condor would be something that could keep your cost down possibly. You could do a long straddle on this, a long strangle, something like that if you didn't know about the direction. If you're going to choose the direction, those options could really help you out. You can also, there's an inverse Tesla that you could use. Go ahead and Google inverse Tesla. You'll get the ticker for that one. I think it's TSLQ, but don't quote me on that one. Or you could even do something that's a bull Tesla that gives you 1.5 return on that. And so those are all things that you can look at, that you can consider. This is not financial advice. These are just ideas tossed out there. It's up to you to do your research and due diligence on each of these companies. So Tesla, in the meantime, what in the heck is it going to do? So at the 50-day for this one, right now that 50-day simple moving average is 250. We have closed above it. It has kind of gone flat and has actually a little bit of a downward slope on it. So maybe a little bit bearish from there as the bias going into this. But this is something very unclear for how the market is going to react going into earnings. When you compare that to last time, when we were at a peak, it was easy to go short on this thing, figuring that there was a run up to earnings and that we would probably sell off from there. And well, we did. And we go back to the previous earnings. There again, we narrowed. And this one, I did my homework on it, and I felt like the market sort of kind of was a little bit over eager for that one, that we would also have a drop for that one. So when I did my homework on that one, I was like, I think that we're actually going to come up with these numbers for consensus. Ended up working out well for me. Shorted earnings this time. It might take me up until Wednesday itself to decide what exactly it is I'm going to do for their earnings, if I'm going to try and straddle something like this, or if I'm going to pick a single direction on it. So we'll wait and see what I do, and I'll report it back here for what I do decide to do on that one. So today, I didn't do a lot of trades today. I still have my Disney call, and that one today I think was up about 5% by the time that the market closed, which it was down 11 or 12% when the market closed on Friday. Now it's in the profit range for us. I'm still looking for Disney to get up to $90 per share. I did do a day trade today. Then that made me, let me think on it, that made me 17%. So it was not a very highly active day for me today in terms of trading. It was one where I was really more looking around the markets, looking for those different opportunities. I found some of them. Those buys and sells, by the way, are over at the Patreon in the Discord. So you can come on over, check those things out. Those links are down in the description, not only for the Patreon, but for Moomoo. Come on over and join my community in the Patreon. They are absolutely world-class people, and I'm so blessed to have them. Thank you guys for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.